Welcome back to Heart and Home's Touchstone series. Today I've got Tracy Anaka, mortgage broker with Mortgage Architects.
Yes.
Tracy's got 17 years of experience in finance, I guess.
Yeah, lending, mortgages.
Yeah. And she works with financial planners, accountants, lawyers, and what have you. Today she's going to be talking to us about reverse mortgages. So, Tracy, whenever I hear reverse mortgages, right, and I talk to a client about it, I always get this like, oh no, I'm not going to do that. Yeah. So maybe walk us through a little bit what a reverse mortgage is, and maybe sort of occasions where someone might consider using a reverse mortgage.
Absolutely. Yeah, the reverse mortgage is kind of turned into that bad R word that you hear. It's, you hear it and it's like, oh no, that's not for me.
Yeah.
But really there's a lot of really good uses for it, especially nowadays. So it had a bad image before because they used to give a lot of the value of the house back to the client, and it turned out that, the value of the house went down, the mortgage went up, and they ended up owing back. They don't do that anymore. So the good thing is when you apply for a reverse mortgage, it's a lower lending amount. They're very conservative on that because they want the house value to outlast how much the loan is. So in every circumstance, everybody's got a different story and a different way of utilizing it. But generally, when you apply for a reverse mortgage, they don't give more than about 50% of the value of the property. So it's very conservative. They're not they still want you to leave a legacy for your family and still have you live well in retirement. So that's always a good thing that way too.
No, that sounds great. So let me just backtrack a little bit. Reverse mortgage is exactly what it is. It's a mortgage on your house, but it increases as opposed to a regular mortgage where you're paying it down and the value of it shrinks.
Correct.
This one increases, and maybe that's where people are a little bit afraid of, like, how does that actually work?
Yeah, so if you take out a reverse mortgage on your home, you actually have the choice. You can have that payment for that mortgage come out of your bank account, but most people choose to have that house pay for that payment. So it increases the value of that mortgage while it's on your property instead of that payment coming out of your bank account. And if you really look into the nitty-gritty of it, it's your house is tax-free way of paying your mortgage, and your income is after-tax payments. So it gets a little complex from there, but that's basically it. And so when you apply, you don't necessarily have any payments on your mortgage, so it gives you more cash flow and more of your income in your bank account to live a better life.
Okay, so I guess a good example of that would be someone who's retired. Maybe they own their own home like completely. There's no mortgage payments on it. And maybe they need to access some funds. Maybe they have some health issues. Maybe they need to fix up the house, the roof's blown off or whatever that may be. So they can look at reverse mortgage as a potential solution for them. I guess it depends. And then they wouldn't have to make monthly payments on it.
Correct,
okay.
Yeah. And it can be used for a lot of scenarios. Even cash flow per month is one of them. Upgrading your home, getting wheelchair accessibility, sometimes when you're in those older ages. And again, the reverse mortgages are 55 years old and plus. So it is for those people that are, may need the wheelchair accessibility, increase their cash flow. You want to take a vacation? Once we can vacation, you want to take a vacation every year? That class of that equity in your home, it's usable to you if you take out a reverse mortgage instead of just your investments. You're using a combination of all of your assets to have a better life.
No, that sounds great. So you're saying you can get a reverse mortgage when you're over 50, or if you're 51?
55 and over.
Oh, 55 and over. Okay.
Yeah.
And can you access how much of your home?
It depends. It depends. So the younger you are, the less they're going to give you, the less limit that they're going to give you. So the way they calculate that is the client's age and the value of the house. And they kind of have this calculator out there that you can determine. So the younger you are, the longer that money has to last. So they give you a lower amount on your home for that. The older you are, they're expecting that this is a lifetime mortgage, so the less it has to earn, or the less time that money has to last, so the house value should hold. And that's a very complex way of saying the younger you are, the less money you get, the older you are, the more money they're going to offer you.
Oh, okay. Interesting.
Yeah.
What other question did I have? Basically, what percentage of your home do they I guess provide funds for, like 50%, 60%?
55% is the maximum, and it goes all the way down to, if you're 55 and applying for a reverse mortgage, you're looking at probably around 10 to 12% of your home is going to be accessible via the reverse mortgage. Another concern that pops up is retired people are very proud of paying off their mortgage and being mortgage free, and I think that's fantastic. This is definitely something that this is put on your home like a regular mortgage. You do not lose your ability to own your home. It's placed just like a normal mortgage on the title of your property, and so you still retain ownership of your home, and I know that's come up quite often as a concern. So that's definitely something I wanted to point out as well.
That's perfect. So you still own your home. What other concerns have been brought up with regards to getting a reverse mortgage?
Yeah, so I spoke earlier about the value of the mortgage surpassing the value of the property. So, and that is a concern with inflated house values that they are right now. What if my mortgage becomes higher than the value and the value of the property drops and the mortgage goes up? What happens? And they have what they call a negative equity guarantee. So if for some reason things, go very poorly, and it hasn't happened, but if the value of the mortgage, when you go to sell the house, or you unfortunately pass away and your estate has to take care of that, it's a negative equity guarantee that allows the bank will take any loss on that property, and they only owe what the value of the house is sold. So you don't have to ever worry about that. If you owe more than what the house value is, the bank takes that on as their risk tolerance, not your clients.
So that really then can provide peace of mind for a senior who's living on their own, and they're just worried that they will have to sell their house because they no longer have are able to have access to funds or whatnot. Right. Yeah. Okay.
Another concern that's coming to mind is if you have a couple and they apply for a reverse mortgage, if one of them was unfortunately passing away, there is no requalification. That reverse mortgage stays intact with the surviving spouse on title. That is in contrast when you have a line of credit or another type of mortgage on that property. The surviving spouse, during a very difficult time of their life, may have to go to the bank, requalify, bring in income documents. If they can qualify for that mortgage on their own, sometimes they cannot. So this one, you never have to worry. It is there for the surviving spouse as well.
Okay. Again, providing peace of mind that way.
Huge.
So that's great.
Huge.
Is there anything else that you feel that you could say to just sort of give people more confidence, I guess, in looking at reverse mortgages as a possible solution when they're trying to look for funding? Yeah, and I think everybody's solutions are very specific to themselves. So I would say if there is any questions about that, as a mortgage professional, I am a reverse mortgage specialist, but I also have access to many other programs out there. So if you come to me and ask me about the reverse mortgages, that's not all that I look for in the conversation. So rest assured, we look at all the different styles. I'm here to give you guidance on what's out there, not pressure you into something you're not comfortable with. So that's a huge part of what I do as I call myself kind of a financing advisor, I guess, a lending advisor. So it's a little bit more of a full picture of what you can. And of course, working with realtors, financial planners, it gives that opportunity to have your asset as being your home combined into your financial plan. Right. So Tracy, what should someone do if they were interested in maybe trying to find some funds? They own their own home. They're not sure if reverse mortgages are right for them.
I'd say the first step is give me a call. I'm available. Everybody's scenario is different, and I want to make sure that it's not a one Band-Aid solution for everybody. It is a process to figure out the best solution, and maybe it is, maybe it isn't, but the conversation is there, and the experts are there to guide you and not pressure you into anything, but guide you into a good solution that works for you. So
wonderful.
Yeah.
Okay. Well, thank you so much for coming.
thank you. Thank you for inviting me. This is
you're
lovely,
welcome. Yeah,
and
you're
I'm happy.
welcome.
Yeah.
Awesome. So if anyone wants more information from Tracy or get more information on reverse mortgages, her information is below. You can see her website and her phone number. Thank you so much for joining us at Touchstone Series with Heart and Home, and I will see you next time. Thank you and take care.